Good morning, patrons. I had a request to do a video on the Greeks. It's going to be quick. It's something that you can look into in depth. A lot of things are online, but I just want to give a quick overview so you can, if you start to trade options, it'll be necessary for you to know the Greeks so you know what you're up against. Options are very complex and they're influenced by many factors. So first, I want to take a look at the market. ES has been chopping back and forth in this range that may go on since we have GDP tomorrow morning. This may go on all day. I don't know, but we break down from the channel, and then we'll start having our move, no matter what happens tomorrow. And then if we start to break up, we have plenty of room in the channel to move to the upside from here, and something is we have this huge candle, that reversal candle from yesterday, and we know that we're actually wrong. If we make a new high there, that will negate that daily candle. So what we're looking at is we had earnings with Microsoft and Google last night, and they're just massively ramping up and holding the whole market by themselves, along with Tesla. And we all know what Tesla's been doing. So just pushing up, and Tesla. So Tesla's having an inside day. So this, it looks like it's a huge move, but really it could be just retracing for either some sort of correction, ABC correction, or a 1-2 and impulsive 5-wave move down. So we'll have to see what that does. But right now, Microsoft and Google are carrying most of the weight. So getting into the Greeks, let's just go over to, let's get under SPY here. Okay, so we're going to go under the trade tab, and every platform, if it's worth it, should have your Greeks. This is Thinkorswim, and we can toggle through some of these under the theoreticals, option theoreticals. So I already have delta, so I'll start off with the delta. Here's the tab here, and you have your options chain with the puts on the right side and your calls on the left side. Now, when looking for, let's say we were bullish today on the SPY, and we're looking at which option expiration and strike should we look for. And one of the things about delta is the actual change each dollar. For example, the movement of $1 is going to be 62 cents on this options chain. And then as you get deeper in the money, that delta gets higher. And so if you're way up here, $1 movement will give you 92 cents. So $92 in options terms would be 92 cents. And on the other hand, down here, your delta is extremely low. So if you move up $1, that's it's going to be an 11-cent gain, and that's not exact, because as you move down to chain, that's where your gamma comes in. So your gamma is the rate of change of the delta. So if we put on gamma, let's see. And by the way, we like to choose in the money. If you're looking to be a conservative trader, and you're looking to you want something in the money for your delta, and I use the delta all the time, it's just the most common thing to say, but we want to look for anything within at the money around that 50. I like to say 60 to 80 range of your delta in order to get nice conservative calls, because there's also, and we'll go over the theta decay as well. So you see the gamma actually, looks like reconnecting here. Looks like the gamma is right around this area. It's the rate of change. The change happens faster at the money, so a lot of people like to choose the at the money the spot, because that changes your delta a lot faster. Now it gets a lot slower as you go out, and a lot slower as you go in further. So you see our gamma is highest right at the money area here at the 0.6. Okay, the theta. Theta is really just decay of time. So if your theta decay, if you are deep in the money, you have way less theta decay over time. Every single day, your options have some sort of decay in them, and the deeper the delta you get in there, the lower the amount of decay happens over time. So that's why you want to check out the theta. You get that really high theta here, and then it starts just like the gamma, it dissipates as you go, but it's all in the negative. You see it's in a negative form there. So less theta decay as you get deeper and way out of the money as well. Vega. Okay, Vega has to do with the volatility. So your Vega is the change of price of your premium as volatility goes up or down. So if an event is coming, let's say earnings is coming tomorrow on whatever stock, not the SPY, obviously. But if earnings is coming and you see your IV over here, that starts to get much higher, and that changes the price of your premium. The Vega goes up and your price ends up higher as well, your premium. So that's why so important to pay attention to Vega when you're coming into earnings. And let's say you have calls and you're taking a bet on earnings, and the right after earnings, the price it's you got the right direction and it moves up 10 points, but you didn't really get too much of a premium increase. That's because the Vega, it drops extremely low after an event occurs. So like earnings, right after earnings, that Vega drops tremendously, which drops your premium. And so that's why it's not really worth it to have naked puts or calls on these earnings, because you may get it right, but it really, really decreases your risk reward. So always use spreads. What comes out of all this, and I know that I talked with a few traders about in-out spreads, but even if you use just vertical spreads, put spreads, and call spreads, then those are much more, they take away all these Greeks. So they counteract Vega, they counteract Theta, and they make your risk reward much more balanced. So spreads are really, really good unless you're just, like I said, doing a directional play, like on the SPY, for example. We would choose something, depending on what our setup is, we'd choose something near the money, all the way as deep as about an 80 delta, depending on what your account size is. And that will save you from the deeper in the money, that saves you from some theta decay as well. But yeah, that's I hope that helps. It's there's a lot of information there, but just know that spreads take away all that theta decay, Vega decay. It protects your position much, much more. So that's why in-out spreads are kind of the ultimate, in my mind, plays, because you can be wrong for so long, and it protects you from all of that decay, and directionally it's a yeah, well, just check out the video. So I'm not going to get into it here, but we'll continue to look at the market today, on and off. I'm not going to hang around too much longer, just this really doing nothing, just oscillating back and forth. So I hope this all helps. Let me know if you have any direct questions, and then that way I know where your mind is at, and how much of this you have absorbed. And yeah, I'll talk to you in the room. Thank you.